going on, guys? Good morning. Welcome into another pre-market live stream here with the Everyday Growth Advisors. Hope you are having a good morning, good evening, wherever you are. Let's break this thing down. Obviously, this morning we have a little bit of pre-market action moving to the downside. No news yet. I don't believe so. Just mainly the dollar here kind of bouncing a little bit, as well as the 10-year still breaking into those upper levels. I think might be causing a little bit of that wishy-washy scenario. As we had already mentioned in the newsletter for this week, the obvious scenario here was that range that we were going to form within that 39.40 all the way to 40.30. And there was a very high likelihood that we would bounce if we don't clear that 40.30 to the upside for that pullback that we've been looking for. Unfortunately, no pullback so far, and now we're just moving to a kind of a falling wedge pattern here. And it does look like, if we continue on this route, then the inability for bears to push below 39.40, which is this very important support here, that has been brought up pretty quickly the past couple of times, is going to turn into a catapult range. So as we continue to consolidate this way, that's going to send price action to the upside, likely to retest 40.30 in the next couple of days. Obviously, we don't know if price action is going to exactly take that route, but we got to take some educated guesses based on our probability and statistics. So that's kind of the route that we've got to go for right now. Even the NASDAQ is in a similar case here. Price action kind of squeezing into a wedge pattern, which is typically going to be a bullish breakout most of the time, but could also lead to a bearish breakdown here, specifically on NASDAQ, because it looks a little different. So we're looking closely at those two things. IWM still kind of looking like a possible downward trajectory here. Small mid caps have not been looking very great the past couple of weeks, so we'll be looking at that part of the market as well. Also looking at gold, we've been looking at pretty much possible bounce here if the dollar also continues its little bouncy bounce, right? Since gold and dollar are dollar denominated assets. Financials looking very close for me to start taking that bearish positioning. What's up, man? Chiri, what's up? Good morning, good evening. By the way, for those of you that are attending the stream right now, you want me to chart something for you, go ahead, drop it in the chat right now so I can get to it in a little bit, right after I'm done with this morning analysis. In terms of macro, nothing's really changed, so there's really not much to update you guys there. But in terms of the micro here, I think there's a lot of technical stuff that we can look at, so that's what I'm possibly going to be looking at. Semiconductors is another one, really much looking like it's gone through a distributive phase, and it's looking like it's entering a markdown phase. Obviously this wave down on semis will be if we can break down this range that we're forming right now. The proxy for high beta / high growth ARKK also looks like it is kind of consolidating in this range. And it needs to really break below this 38.50, 38 level firmly in order for us to see that downside scenario. So far, since this downside selling has not been that pressured, we've not really seen that much aggressive selling just yet. Until and unless today changes something, I'm still in the camp where I would love to look for the counter play if we get a strong bounce in the 39.40 on SPX, and also a strong bounce in the 11,900 to 12,000 range here on NASDAQ. This has been prior support here, so we'll be looking for a possibility of this bounce in this strong range here. If we can get that and we get that bullish breakout, that's going to probably head up into the 40.30 and 40.60 to retest these back test levels that we have been really waiting for this whole week. But so far, we've not really been able to clear the upside or the downside. So we've just been ranging between, and hence the name of this live stream, as the consolidation continues. So that's kind of the update with the small caps, mid caps, and the main, obviously, the main mega caps. Still kind of, honestly, being kind of weird. Google, with this falling wedge pattern, which kind of wanted to break out yesterday, but then didn't really break out. Today, there's investor day for Tesla. So that could see some possible volatility, but I seriously doubt it. Um, but we'll be obviously we'll be watching this possibility on Tesla closely as well. Um, it's looking kind of head and shoulder-ish, but honestly not really perfectly, because this would have to be up here in order for it to be a perfect head and shoulders. So not really a perfect head and shoulders. It's just kind of a lopsided one. So I wouldn't really call it a perfect head and shoulders. And then you have Chinese equities that got bought up pretty aggressively today. So since two people are requesting Baba on the comments or the chat, let's do that right now. So the PPI numbers came out, I believe, for Chinese market, showing that the manufacturing industry actually grew a little bit this past month in February, which is good news for the Chinese economy, because it shows that they're obviously expanding and things are getting up into traction. We were expecting us to come down into either of these three levels. If you have attended the previous live stream, I spoke about these levels, the three levels here that I drew being the key levels. We didn't bounce on the first one. We looked like we bounced on the second one. And there's still a third one that's all the way down at 77, 76, which in all seriousness, if we don't get continued momentum and a break above 95, then this could just be a dead cat bounce right here and then fall all the way back down to 77, 76. So from a technical perspective, for me, it's really important for us to clear 95 bucks before I take any upside momentum here, since this is a key pivot point at 95 bucks. 95 is also going to be a key level of resistance temporarily, because this was a support that's going to turn into resistance. So on the daily chart, you can see this is a huge little inverse head and shoulder that's forming now, which I had drawn out like weeks ago. Those of you that have attended the live stream long enough, you know exactly that I've been drawing this on Baba for like, I don't know, 2 or 3 weeks now. So it's coming into fruition. But remember, just as how we had this period consolidation here and a choppiness, don't expect Baba to go a V shape here and go straight up. There might be a little bit of consolidation here as well, and then that wave up. So I think that you still have a lot of time on this, and I think that there's no reason to rush into taking upside exposure right here. I think you should wait to see how Baba instead does at the $95 level, and then play it according to how it performs at the resistance that it's about to start to trade towards. So this bounce at 92, I know a lot of retail traders are going to start taking upside plays, and that wouldn't be a smart idea, because you don't know if 95 is exactly going to be the key pivot here for us to break or hold, and so you're going to have to really be careful trading this upside. Not until you get that 95 break plus confirmation that this is indeed getting support at 95, then only would I be comfortable taking this up into the 120s, 115s, 100s, so on and so forth. So I think that should be pretty clear with Baba. Waiting for confirmation as a trader is really the most important thing. Majority of the time, 90% of the time, you're waiting around, waiting for these things to happen so that you can have the right entry. And sometimes the right entry is all it takes, because that's what sets you apart from the majority of other retail traders who are not able to keep it in their pants. So if you agree with me, then you would know that it's sometimes just waiting and being patient for the right moment to strike, rather than jumping in and out and in and out and in and out and in and out and hoping to get the right moment. That's kind of like shooting a machine gun versus taking a sniper and really zeroing in on your target. So that's what I have for Baba. Now, I know a lot of you are probably going to want me to break down Tesla, so I'm going to just do it anyway, because I swear to God, every single live stream you guys want me to break down Tesla. So we had this pennant formation. We broke out of it, gapped up, kind of consolidated above. Yesterday, we failed to break out at 211, although we got pretty nicely up there. And then a rejection came. Actually, we opened at 211, and then we sold off the entire day and consolidated sideways. That's what happened here. A lot of the price action yesterday was just consolidation. And it's actually kind of wild, because we've been seeing a lot of bullish options flow on Tesla. It's been insane. They've been buying up a lot of different call options for this week expiry, all the way up into 230, which is way up here in the supply zone. Now, obviously, it doesn't mean that we have to rally up there right away. And so if you're playing Tesla contracts and you really, you are expecting this thing to move to the upside, my recommendation to you is not to play the weeklies. And so if you don't have the capital to play anything but the weeklies, please stay away from trading this stock right now, okay? The implied volatility of the options chain is insane. It's at 90+%. You don't want to be trading options that are 90+%, or holding them overnight, because you risk yourself at a IV crush. You risk yourself at a volatility crush, just in any kind of sense, right? So you want to be aware of that and be really careful. I wouldn't trade Tesla if you're a small account that can't handle the pressure. It's really just much more for people who are willing to put a little bit of money and stick it in for that move to the upside. If you think that you're gonna get that strong break above 213, 214, and then ultimately up into 220, 225, and 230. If you're a small account, you really want to be waiting for the break at 217 instead. 217, in fact 218, right? And then you play the move after it's broken 218 and ride that wave up. So stop trying to get it here and then hope that it's gonna break out, because hoping is not gonna do you any good. Remember, it's all about taking things based on your analysis and the probability of success here. Nvidia is the other one that I wanted to kind of touch base on, because we haven't followed the stock for a while. I've been just not looking at it because it's been consolidating. This 240 has been having a tough time breaking out, and the 230 has been the constant support. We've been ranging between, looks a lot like consolidation or distribution. A break below 230 here will probably send us back down to retest a lot of these support levels down here. So we'll be looking for a potential in Nvidia to break down in the next couple of trading sessions if this consolidation breaks. I'll be watching this one. Yesterday, Coca-Cola sold pretty aggressively. This is one of the things that we're watching on the snipe list this week. This level has been a constant support, the 59.23 level. So we'll be looking to see if we can get a nice bounce here. If we do, then we'll likely take some upside here, all into the 60, 50, 61, 62. There's a whole bunch of levels that we could play here with Coca-Cola. This is a decent stock that moves actually pretty volatile, if you think about it, for a stock of its kind in consumer staples sector. So I like the fact that it's actually a pretty decent mover in terms of volatility in the consumer staples sector. It actually does have waves of price action, and in a month-to-month basis, it can actually move 5%, 6%, which is nice. That's the kind of activity we want to see as a trader. And so I like this if as a possible breakout here to the upside. If we can clear above 60, 50, I would be happy to take some upside here on Coca-Cola. Netflix. Netflix possible gap fill where? Down? Are you talking about this gap fill? I wouldn't really count I wouldn't pin my hope on this, to be honest. Yes, it's possible, but I wouldn't pin my hope on it. I have an alert set up below 313. If it breaks 313, then you can play that downside pivot into 300. Basically, that's about a $10 move. Go risk off at around 320, 323. You could easily play that upside downside risk reward ratio. Until then, this thing might consolidate sideways. So I don't think that you should play the gap unless you're in the gap. If you're talking about this gap specifically, though, which is all of this move down here, this gap. I don't know if that's what you're talking about, but this is not really a gap, though. So I wouldn't pin my hopes on it, because this has been a support in the past, and I think a consolidation here is more likely than anything else. Price action is still bullish, by the way. Still bullish. Okay, let's see. What is this? BWA, Borg Warner, mid cap. Rich, I swear you bring the tickers here that I've never seen in my life. Yeah, I swear to God. And it's cool. It's really good. I love it, just so you know. 2 billion market cap. First thing I don't like. Second thing, okay, it's volatile enough to be traded probably. But I'm guessing you're asking as base of an investment. So as part of my discretionary portfolio, long shares, cost basis $42. $42? Wait, what? Oh, wait. It's BWA. BWA. There we go. Wrong ticker. My bad. My bad. Wrong ticker. My bad. Okay. There. This is the right one. Okay. Yeah. Okay. So this is 11. Okay, 11 billion. Okay, that's good. That checks off one box. Just so you guys know, I don't trade stocks that are below 10 billion market cap, because it opens up for manipulation, just so you guys know. Looks interesting. Okay. Looks interesting. Let's see here. So you said As part of my discretionary portfolio, long shares cost basis 42. Okay. Well, that's good. I would keep your shares. So what's the question here? What's the investment idea, or what's the thesis here? I mean, obviously there's like a nice little demand zone right here. It's a good spot right here. This is an anomaly right here. Obviously this is 2020, so nothing counts here. It's entering a zone of possible supply, but this is a local supply, so you're not really looking at, yeah, so here. Yeah, this is a supply zone right here. If you're looking for a swing trade, this is a swing idea. Once it starts to get into here, you can't trade it anymore. You'd have to wait for the break above this $50-something level. You have to wait for the break above 58, to be honest. They've made investments that make me think they're breaking out of previous high. I see. Okay. So you're wondering if you should add more shares? Is that the question? Or the question is, should you invest more? You'd have to look at the fundamentals. What is the business fundamentals like? I'm guessing. Let me have a look very quickly here. I mean, I'm pretty sure TradingView does a snap analysis here. Longer term. Okay. So revenues growing pretty decently. Profit margin is positive. Net income is positive. That's good. Combustion, hybrid, and electric vehicles. Okay. I see. I mean, from the perspective of just technicals, I would say that this is obviously not a spot that you want to add shares. What you instead want to do is wait for this thing to reject up here. At least reject up here and start coming down. If it does reject, then you can start selling some cash secure puts and pick up more shares on the way down. That's what I would do. And if you're thinking that it's going to break out from here, then my advice to you is wait for the breakout. Because this is a huge wave up, and a huge wave up will be followed by a wave down at some point. So you don't want to take this on the wave up at all. You want to wait for that wave down and start looking for those opportunities when it starts to come further down. And obviously I'm looking at this on a weekly chart, but on a daily chart you can see just how extended this thing is, heading into the supply zone. So I would wait for this either to reject up here, which, by the way, it is losing momentum now. You can see that these candlesticks are starting to get pretty short, and it is hitting that supply zone up here. So it does look like there will be a possible reversal. Maybe I would say one last hurrah here, and then a reversal comes, maybe after a gap down or something like that. And then you can start to add more shares. That's what I would do. In the meantime, you should do a fundamental valuation of this business and see how much it comes up to. One such way you could do is do a DCF for a 10-year. Really simply, let me go have a look at its financial very quickly. BWA. There we go. So you have revenues growing at a pretty nice level here. Let's have a look at OCF really quickly, or EBITDA, in fact. EBITDA also growing pretty nicely here. So you have a positive EBITDA, that means you probably have positive free cash flow as well. So looking at financials, looking at the cash flow statement, let's have a look. Net cash flow. Okay, so only this past year, they had negative cash flow. So this, you need to figure out why this happened, by the way. Income, let's see here. Inventories, accounts receivable. Oh, what the hell happened in accounts receivable? That's a big out. Something happened here. This is what's causing the issue. Net change, property, plant, equipment. Okay, and then they had some divestments. Actually, they had acquisitions, not divestments. Let's see here. Long-term investments. Long-term investments too. This is negative cash flow, so they sold some. Let's see here. Something happened with accounts receivables, which has been pretty stagnant and decent, and now all of a sudden it's grown to minus 564. You need to find out what happened here. Just looking at this from the very, very surface level, that's what I would be looking for in terms of, on the balance sheet, or just looking at what the heck's going on there. Receivables, yeah, so there you go. Receivables have grown higher, but then, let's see here, inventory also. Sorry for guys who are attending the stream and you're looking at me at do FA right now. I'm sorry, it might be boring for some of you, but this is the life of a trader. You're supposed to actually look at financial statements. For those of you that don't know, that there is another world outside of technical analysis. So I hope that was not boring for you guys. Rich, I would do have a look at what is going on with account receivables here. Something's going on here with accounts receivables, because the change of account receivables is what's caused, together with the change in net long-term investments, and then also, what was the third thing that I looked at? It was, I think acquisitions. What was it, acquisitions? I think it was acquisitions. Yeah, look at those 3 lines and figure out where that money's gone, because that's what you need to figure out, and then you'll be able to get an idea. Oh, and also, I think you would be able to use EBITDA as a cash flow measurement. So you can use DCF 10-year EBITDA. I think it give you a good analysis. Or if EBITDA doesn't come out right, then you can use revenues, since revenues are positive. So that would be my recommendation. If you don't know how to do it, message me on Discord. I'll send you my valuation, and then you can check it against yours, and you can go from there. So that's how I can help you with that. Okay, CrowdStrike. So we've been trading this one actually quite a fair bit. I like the setups here with CrowdStrike. Really nice breakout after breakout. And then yesterday it broke out of this bull flag, but then didn't really manage to hold the consolidation. And then you combine that with the recent price action in SPX this morning. You know, it's been looking a little muted, but it's been holding really well. So if CrowdStrike actually breaks out with good momentum today, I will be taking some 125 calls. I've been trading 125 calls this entire week. Have a look at this. Literally traded it once on Monday, traded it again yesterday, but then took an L on it. I've been trading it the entire week. For this week, I'm currently up at 2.8K for the week. Pretty lackluster week so far. But we're hoping to close the week out strong with additional trades. I've been taking very light risk on all my trades. Pretty much below that, like, you know, 6,000-7,000 range, which represents like literally 2-3% of my portfolio. And so I've been keeping it pretty light. So with CrowdStrike, excuse me, if it gets a nice breakout above 122 or so, I would be happy to take some 125 calls, which is where this has been rejected in the past. By the way, the premiums on these, on the weeklies especially, go crazy. You could do the next week expiries too if you want to be just really sure. Okay, that's my take on CrowdStrike. Roy, Santosh, Triple M looks double bottom on the weekly. Possible bounce here. Can we take 125 call 3 months out? Let's have a look. Oh, actually, let me do it on this one. Ah, yes, very nice, very nice, very nice. I like it. Yeah, that's a perfect double bottom bounce, actually. Let's see. Okay, so you'll need to wait for a bounce. Let's see. Okay, so you have this. Okay, hold on. Let me get into the smaller time frame here. Okay, so you have this right here. Okay, I like the idea, but let's see if you have actually confirmation yet. No, you don't. You don't have confirmation yet, Santosh. I'm not sure if you've taken EJ courses before, but we typically wait for a 2-wave confirmation from the bottom up. So this is your first wave, and it hasn't really broken out yet. So okay, this bounce up right now, pre-market is nice. This is your first wave breakout, wherever this is going to happen. So this is only the first wave up. You need to wait for a second wave on the 15-minute. And that's going to give you your confirmation of your trend directional change. Right now, you don't have that. You just have consolidation. This is the previous high here, right? You need to break that previous high, 113 or 114, whatever this level is. At here, 113, yeah? That previous high has to be broken in order for that direction trend change. So 113 is your pivot. 113, 114, okay? So you need that 2-wave. What's going to happen here is you're going to get a breakout, and then another breakout, and then a support here from that 113. And that's going to be your confirmation for entry for the upside at 120 something. So my advice to you is let this brood a little longer. Let it marinate. It still has a little bit of time to go. before you're gonna get that swing trade opportunity for 3 months out. You got the strike somewhat there. You got the expiry on the nail. So let me also give you a little bit of pointer about kind of zeroing in on your strike and expiry. For a swing trade, if let's say your target is indeed 125, for example, right? Let's say you think 125 is your target and your entry is going to be above 113 or 114 after confirmation, then the idea is you should always take a strike that's halfway of the distance. So about 120 is going to be your strike, roughly maybe 118, 120. That should be your strike. Now, does anybody know why? Why do you do it like this? Why do you take, for swing trades, why do you take a strike that's in between? 118 would probably be perfect, but I guess 120 would be a nice round number. So why do you take a strike that is in between both your target point and your entry point? Does anybody know? It could be a nice teachable lesson for you guys as I get into the last minute of the stream. I'll give you guys a hint. It has to do with the Greeks. So, I don't think... Okay, there we go. Yeah, Jerome, nice one. So, Jerome, yeah, this definitely shows that you've been listening in the course and in class. So, that's a good job. Perfectly mentioned by Jerome, right? I think people who've taken the EGA mentorship course, they understand this dynamic. You need to understand something. When you are building towards a specific strike or a specific target point, you want to maximize gamma and delta. If you're going to play up to the strike, this would mean that you're only maximizing gamma at 125 because gamma is at peak at 125. If you look at how gamma works, gamma is only going to get peak at 125. Therefore, you want to be taking a contract that's in between so that you can actually accelerate both gamma and delta into your strike price. So if your target is 125, then you should take something in the middle. This way you get your gamma acceleration and then delta acceleration after that. That's going to give you a much more energized return on your contract rather than taking just the 125 strike, which is where you target. So you got to really know your Greeks and know your options in order to really benefit from the options contract. And as a swing trader, your job is to really know that really well. All right. I think a lot of teachable nuggets here. By the way, just a quick little update, guys. And on your way out, if you can smash the like button, I appreciate it. We are going to be holding a webinar in about 3 weeks from now, probably on the 25th of March. And it's going to be a webinar that is going to teach you guys about the bond market, the correlations of the bond market with the equity markets and market psychology. I'm going to be doing a nice webinar about those two topics. I think they're really important topics that you guys should really be knowing. But right now, I'm going to hop off this stream, jump into the Discord. Once again, if you are not part of Discord, we have 14 days free trial. You can check us out. Click on the link in the description and join the tribe today so that you can take advantage of that 14-day free trial and be a part of our live trading sessions every single day. You get to trade live with me, listen to my market commentary, and I'll see you guys back on Friday again. So thank you for tuning in. I hope you guys have a great trading session, and peace out, guys. Take care.